All right. Hello, everybody. Welcome to our webinar on the Bitcoin Lightning Network today. I am here with Lisa Neigut from base58 and Blockstream, and I am Tyler Levine. I lead the Bitcoin engineering team here at BitGo. And with that, I think we can probably get started. So yeah, as I said, I'm Tyler. She is Lisa. Here's what we're going to talk about today. A little bit about BitGo and base58 and Blockstream, what we kind of do over where we are, and then we'll talk about some of the challenges that we have with the Bitcoin blockchain and why we've invented, the Lightning Network, well, why it was invented, and some of the problems that it's designed to solve. We'll talk about what is the Lightning Network, kind of how it solves that problem with the Bitcoin blockchain, and we'll go into a bit about how it works without going too technical. We'll talk about some of the benefits and some of the trade-offs that you run into when you're using the Lightning Network and making transactions on it. We'll talk a bit about how to participate in the Lightning Network, and then we'll have some time at the end for questions and answers. If anybody has any questions while we're chatting, feel free to throw them into the chat. We're happy to address those kind of on the way. All right. So about BitGo, base58 and Blockstream. So BitGo is a custodial provider for cryptocurrency and related services. We have support for many different cryptocurrencies, and what we work on the Bitcoin team is, of course, Bitcoin. So the team that I lead is responsible for building all kinds of cool Bitcoin services that help power the BitGo platform. Lisa, can you talk about what you're doing over at base58 and Blockstream?
Yeah, totally. Yeah. Thanks, Tyler. Yeah, so I call base58, it's kind of like my passion project. I moonlight as a Bitcoin technical educator. So we teach, our first class that we got out is Bitcoin transactions. We do really in-depth, like developer-oriented protocol class about Bitcoin. It's up on, we just put the first 3 weeks of our 6-week class up on Udemy. We're going to start trying to do more in-person classes in Austin. So if you're interested in learning about Bitcoin protocol, I'd love for you to come to base58 class to check us out. And then my day job, I work as a Lightning protocol engineer at Blockstream. I've been there for 4 years working on protocol level improvements, mostly around on-chain, how you open channels and how you find inbound liquidity on Lightning.
Awesome. All right. So first I wanted to start with a quote. Bitcoin cannot scale to have every single financial transaction in the world be broadcast to everyone and included in the blockchain. There needs to be a secondary level of payment systems, which is lighter weight and more efficient. This was from a guy named Hal Finney, who was one of the first users of Bitcoin way back in kind of the 2009, 2010 timeframe. And so he kind of saw this problem coming 12 years ago. So it's not a new issue with Bitcoin, but it has been one that's kind of presented more and more of an acute problem as the network has continued to grow and as it handles more payments. We have known for a long time that we need a cheaper, lighter weight, faster, and more efficient way of making transactions. And essentially that's what the Lightning Network is going to do. So the core question is, can you pay for coffee with Bitcoin? I learned this in person the hard way. It's difficult to pay for coffee with Bitcoin. I was in El Salvador last year for a Bitcoin conference, and I was waiting for my flight and wanted to buy a coffee. The merchant there took Bitcoin, so I asked to pay with Bitcoin, and he didn't take Lightning at the time, so I had to pay with an on-chain Bitcoin transaction. And so I sent him the Bitcoin for my coffee, and I tried to leave, and he said, "You can't leave yet. We need to wait for the transaction to confirm." And I had about 15 minutes to catch my flight, so I really had to make my way to the gate. And luckily, a block showed up in a few minutes, and I was able to leave with my coffee. But in a world where I could have paid with Lightning, that transaction could have happened instantly and for very low fees, and I could have been on my merry way. The Bitcoin the Bitcoin blockchain as is today is not infinitely scalable. In fact, it can only handle about 7 to 10 transactions per second globally, so across the entire network. If there's lots of people using the Bitcoin blockchain, they have to compete with fees to get confirmations in a block. So what that means is it could get very expensive if there's lots of people trying to make transactions. And the last and the problem that I ran into was it can take several minutes, sometimes many minutes to get a transaction confirmed. So you could be sitting there waiting for an unknown amount of time. It could be a minute, it could be 5 minutes, it could be 10 minutes, which is the average amount of time that it takes, but it could also be an hour if you get really unlucky. So that makes for a really terrible payments experience when you're trying to buy something quickly, like a cup of coffee. Ivan has a quick question in the chat. He says, what can Blockstream and BitGo offer for solving the inbound liquidity problem Lisa just mentioned? Good question, Ivan. Maybe we'll come back to that a little bit later when we talk about Lightning Network liquidity. Okay. All right, so what is the Lightning Network? The Lightning Network is a payments network that allows users to transfer Bitcoin without using the Bitcoin blockchain directly. So it exists kind of on top of the Bitcoin blockchain, and we'll get back to how that kind of works a little later. But essentially, it allows users to make quick and easy payments without having to make or deal with the slow transaction and difficult mechanics of the base Bitcoin blockchain. All right, so maybe Lisa, you could take this slide. This is we're kind of gonna try to explain how does it work under the hood.
Yeah, I can take this one. Yeah, so I think one thing we kind of Tyler and I were talking about right before the call started, and Tyler, maybe this is a better place to kind of let me know if maybe there's a better place to go into it. But I think one thing that I like thinking about when thinking about like Lightning channels, which is kind of what this slide is showing, is like a bunch of Lightning channels connected to a center node. Is Lightning like historically really comes out of a movement is happening in the blockchain space in 2015, especially in like researcher circles about how Bitcoin and blockchains were code as law, right? So when we make like a Lightning channel, so like all these little, what this is showing is Lightning channels between two parties, right? And how you can kind of have the channels all sort of network together to be able to make payments. Well, we talk a little bit about just one of those links, like what is one of those Lightning channels? Lightning really is about making contracts using Bitcoin transactions. So when you open up a channel, the way that Lightning works today, and maybe at some point in the future we'll change the protocol so you can have more people, but right now a Lightning channel is a contract between two parties. You can only ever have two parties in Lightning channel right now, today. And those two parties kind of agree about how much Bitcoin they're going to put kind of in like a joint account. Basically the contract though is a Bitcoin transaction. And so, when you make a contract, how do you prove that the contract is valid? Well, you get signatures from every party that's involved in the contract. And the way that you do that in Bitcoin is by getting signatures on a kind of output or like a locking script or in Bitcoin that we call multi-sig, right? And this multi-sig means it's 2 of 2. That means there's 2 parties, and you need signatures from both of the 2 parties in order to spend that Bitcoin, so to speak. So all of these little like links or channels in the Lightning graph are contracts that 2 parties have come together in and put some Bitcoin basically into a shared 2 of 2 pool. They've signed a contract, they've published it to the Bitcoin blockchain to kind of establish or open up that contract or open up that joint account. And then every time that they want to update the balance of who owns how much Bitcoin in that joint account, they sign a new contract. This new contract is a Bitcoin transaction. The Bitcoin transaction says, maybe Bob owns 50% of the channel and Carol owns the other 50%. And so then you can take all these little 2 of 2 contracts or agreements between different people and kind of network them together so that like in the picture, let's say Carol is in the middle there, and Carol's established a Bitcoin or Lightning channel with 4 other people, with let's say Bob, Mary, Alice, then I'm gonna come up with an Erica, I don't know. So you've got a couple of bunch of different nodes, and they've all negotiated an on-chain Bitcoin contract that we call a Lightning channel. And then when they want to send money through it, all you need at this point to update or to send money through the network is new signatures on new contracts that now update the balance of who owns what in that Lightning channel. So that's that's a pretty long-winded explanation of how it works, but it's pretty accurate. Yeah, that's my 4-minute overview of how Lightning channels work.
Cool. And thanks, Lisa. And maybe you could just chat about what is the inbound liquidity thing that Ivan was talking about in the chat.
Yeah. So, okay. So, a Bitcoin, so this Lightning channel is a contract between 2 people, right? And it usually has a starting balance, right? And since there's always 2 parties in that, one of the parties is going to have, each party starts with a starting balance, right? So you can only receive a payment over the Lightning network if you have a channel with another party and that other party has a balance on their side of the channel, right? Because in order to make a payment, someone needs to update, your Lightning balance, your Lightning channel balance, so that money moves from their side of the channel to yours, right? So inbound liquidity just means that you have a Lightning channel with another person, and that other person has a current balance, right? So if Tyler and I had a channel with each other, and I want to receive a payment worth, I don't know, 1,000 sats on the Lightning network, Tyler would need to have I would need to have a channel. If Tyler, let's say Tyler's my only channel, Tyler would need to have a balance of at least 1,000 Satoshis on his side in order for me to receive a payment of 1,000 Satoshis, right? Because in order to receive a payment on Lightning, I'm going to need to update my contract with Tyler such that he moves those 1,000 Satoshis from his side to my side, right? And that would be me receiving 1,000 sat payment. So inbound liquidity is, from my perspective, right, having a balance on the other side of a channel, of any channel. So I had multiple channels. I could add up all of the amount in a channel that didn't belong to me, that belonged to the other party, and that total would be my inbound liquidity. And that represents the total amount of payments that I am currently able to get over Lightning, right? And that just has to do with how Lightning is these 2 of 2 contracts with joint balances, right? If I want to receive a payment over Lightning, I need the other person in the channel to be able to pay me. So that's kind of an inbound liquidity overview.
Yeah, cool. Great. Thanks, Lisa. I guess an important correlate to that is the Lightning network does not allow you to overdraft your liquidity, right? All the Bitcoin on the Lightning network is 100% backed by on-chain Bitcoin, and there's no way to spend more than the amount that you've locked into this contract. And so that's why inbound liquidity is important, because if you don't have the sufficient inbound liquidity to receive a payment, that payment just fails. It just kind of gets dropped on the floor and nothing happens.
Yeah. And I think that's kind of one interesting thing then, I think, about Lightning, the fact that it is all backed by real Bitcoin, in real transactions that you're making new contracts about. It makes it it's one of the only payment networks that I know of that is extremely fast and also has something that I would call instant settlement. So like when you make a payment with a Visa card, for example, it's, you tap your card at the register and it seems like the money gets, your balance on your account gets updated immediately, but you don't actually pay for that until like a month later, right? So the actual movement of the money is separate from the accounting of how much you owe, right? So that's not instant settlement. Settlement is the movement of the money. Lightning is both instant in terms of updating who owns what, but also like the money, the Bitcoin actually moves when you make the Bitcoin transaction, when you make a Lightning transaction. So it actually has like final settlement, instant final settlement, which I think is really pretty novel in terms of really fast payment rails, which is cool.
Yep. And that's kind of what you want when you're a merchant accepting money or a person paying a merchant for money. You kind of want to have that guarantee that your transaction is done and you can leave without having to worry about a chargeback or some other stuff happening with your payment. Okay, cool. So yeah, I think we covered some of the benefits, but I'll just kind of reiterate this one more time. The kind of value proposition behind the Lightning Network is that it enables faster and cheaper transactions, but also smaller transactions. There's some kinds of transactions that are just not economical to make on the main Bitcoin blockchain. There's also technical limits on the size of transactions that you can make. So imagine you want to pay for something really small, like you want to pay for a tiny little postage stamp or something, and there's a fundamental limit to the amount of value that it makes sense to transact on the Bitcoin blockchain. Whereas if those fees were a lot lower, you could open up kind of pay-as-you-go models or kind of a lot more interesting microtransactional economic models that allow you to be more flexible with how you kind of price your products. Again, the Lightning Network is connected to the Bitcoin blockchain and exists kind of on top of it. You can think of the Lightning Network as just exchanging these contracts, which are really just pre-signed Bitcoin transactions that you can always take to the main blockchain if you want to. So that means if someone is acting maliciously or they're trying to steal money from you on the Lightning Network, there's always the ability to turn that Lightning contract back into the on-chain Bitcoin that you kind of last agreed upon. So it really preserves the trustless nature of the Bitcoin blockchain without kind of compromising on any of the security benefits that you get with making on-chain transactions, which is really nice. And further, transactions are more private on the Lightning Network. If you're making a payment to somebody, the only users on the Lightning Network that know the details of that payment are the person who sent it and the person who received it. This is unlike the main Bitcoin blockchain, where everyone on the network is maintaining all of the account balances of everyone who holds Bitcoin. So when you need to pay somebody, you have to tell everyone, and they all have to update their record of the ledger. With Lightning, all you're doing is updating that contract. So you don't have to tell everybody on the network that you've updated the contract. You just need to tell the person that you have the contract with, which is a nice privacy benefit. All right, so the Lightning Network is not, kind of a free lunch. There are some trade-offs that go into it. One of the things we already talked about a little bit is liquidity. So you need to have enough funds committed into these contracts in order to make the payments and receive the payments that you want to make. There's lots of Bitcoin kind of committed into the Lightning Network already, but you need to kind of have the right amounts for the types of businesses that you're trying to run on the Lightning Network. So there's kind of been a market that's evolved around exchanging liquidity and making sure that it's allocated in all the right places. And there's also a couple of different models of how to use the Lightning Network that have popped up. The kind of two families that I'll talk about are custodial models and non-custodial models. So custodial means that you own the keys, like you're a direct participant in this contract. That means you're usually running a piece of software called a Lightning node that helps you manage these contracts and makes sure that you're always available in order to update them if the need arises. Well, that gives you kind of a lot of freedom in how you can use the Lightning Network, and you don't have to go through any third party in order to access the Lightning Network. It is a public network. It does mean that you need to be a little more careful with how you're backing up your keys, how you're securing your Lightning node, how you're making sure that if you go offline, there's kind of somebody that can help manage your channels for you. So there are a little bit more considerations when you're using the Lightning Network directly and holding your own keys, and that's what custodial means. And then there's this other kind of family of services or ways to use a Lightning Network that is called non-custodial. And what that means is you are trusting somebody else to hold your keys. You're outsourcing that custody to a third party. And that's kind of the model where you are just using a service to help maintain that Lightning Network connection and update those contracts for you. So that means you have to kind of trust that service in order to maintain those keys and keep them secure on your behalf. And you also need to trust them to run their service well. So you're kind of making sure that they're staying online and that they're able to respond to contract updates and that they are maintaining sufficient liquidity across the channels that they're maintaining so that your payments that you're asking them to make go through successfully. Is there anything you'd add to that, Lisa?
No, I think that's a great overview of some of the trade-offs. Yeah, for sure.
Okay, cool. And then I just wanted to highlight, are people using this network? And resoundingly, the answer has been yes, more and more people are using this network. This is a graph of what we call the capacity of the Lightning Network over the last year. At the kind of end of 2021, there was about 2,400 Bitcoin locked in these contracts across the entire Lightning Network. And over the last 12 months, we've seen that close to double to 4,700 Bitcoin. And this was following kind of a 300% growth in the year prior. So lots of Bitcoin is coming onto the Lightning Network. There's many more applications that are being built on the Lightning Network. About 100 million users around the world have a Lightning-enabled wallet application installed on their phone. And there was a study done last February that said that about $20 million in payment volume over 800,000 transactions were processed over the Lightning Network. And again, that's kind of a guesstimate in some ways because a lot of this payment volume is private, so it's extrapolating off of some smaller data sets. But people are using the Lightning Network to pay for stuff every single day, and it's working.
Yeah, I think this is so these are really great numbers. I think one thing that's kind of interesting about Lightning is, to go back to the privacy that Tyler was talking about a few slides ago about how much more private it is than the main chain network. On Bitcoin, you can always see when someone spends a UTXO, you can see how much volume of payments is moving through the Bitcoin layer 1, right? But one of the things about Lightning is that it's really hard to get really good numbers about how much usage there is, how much liquidity is locked into it. I guess you can kind of see that a little more, which is great in terms of privacy for having a private transaction network, which is what we want. But I think it makes it really hard to talk about it in excited tone, be excited, look how much adoption there is of Lightning. You're like, well, we think there's a lot of payment volume going on in it, but we don't have any, there's no centralized, it's really decentralized, right? Lightning is one of the is the most decentralized, largest number of like secondary nodes in terms of layer twos in existence across any blockchain. There is no other layer two that is more decentralized and has more people on it and using it than Lightning. But I think that Lightning isn't able to get as much press because it's so private, which is cool. So these numbers that we've got are really great, but they're all really kind of guesstimates, because the real truth is no one knows exactly how much volume is going through Lightning. And I don't think we ever will, which is like, one of the strengths of the protocol, but also like its downside. So
yeah, and even this chart is in some ways a bit of a lie, because this just looks at the public capacity of the network. There's also the ability to make private channels, which you would not see here. And there's been some other estimates that makes up a fairly significant portion of the capacity on the network. All right. So how can you participate? So as a consumer, the easiest way is, first, make sure you can use the Lightning Network. Go download a wallet app that supports Lightning and set it up, and make sure that if you're using a custodial version, that you're making sure that you're managing your keys well. And then go ask businesses, or go find businesses to do business with that accept Lightning payments. Go try using the network. Go try buying a coffee with it. Go try buying, something on the internet from a merchant that supports Lightning payments. The more people jump on to the Lightning Network, the better it'll get, because there will be kind of we'll start resolving this kind of catch-22 of nobody's using the Lightning Network because nobody wants to pay with it, and nobody wants to pay with it because nobody's supporting kind of merchants on it. So that is kind of the best way to start as a consumer, is just try downloading it, setting it up, using it, and go find businesses to go pay Bitcoin over the Lightning Network with. If you're technical, you can run your own Lightning node and kind of run the protocol yourself. There's three kind of major software providers that are building Lightning nodes. The company Lisa works for, Blockstream, has made Core Lightning, which she contributes to. There's another one that's popular called the Lightning Network Daemon, or LND, from Lightning Labs. And there's also Eclair from a company called Async. And all three of these are open source software that you can just go download and install and run. They require you to run a Bitcoin node so that you can make transactions happening on the Bitcoin blockchain and know when new channels are opened, etc. But this is all something that a fairly technical user can do. And you don't need to ask anyone's permission. You just download the source code and you can start right away.
Yeah, I want to plug really quickly in terms of Lightning enabled wallet apps. The Phoenix wallet from Async is another way that you can get access to their code, so to speak, and run a Lightning node on your mobile phone. It's probably one of the most sophisticated self-custodians, so you own the keys for Lightning wallet apps that exist. So I think there's other ones that are out there, but I think that one's definitely a really good one. Oh, you've got like a whole list. Yeah.
Glad you mentioned that. Yeah. So, if you need ideas on what apps you should go look at to download, there's a bunch of them. Some of these are kind of following the self-custodial model. Some of them are outsourcing that custody to another provider. So Lisa just talked about Phoenix, which is that self-custodial model from Async. Whereas Cash App, which also allows you to make Lightning transactions, is outsourcing that custody to Block in that case. And these kind of exist on a spectrum with kind of different trade-offs and different user interfaces. And in fact, some kind of try to hide the fact that they're using Lightning at all underneath the hood. So that's like Strike, where you can kind of send dollars over the Lightning network kind of transparently, because they're converting it to Bitcoin and then back to dollars behind the scenes for you.
Yeah, I kind of want to, maybe this is too much information, but it's kind of fun. I want to talk through what all the different Lightning implementations are behind these. So Cash App and Blue Wallet both use this thing called LDK, which is sort of a developer kit for Lightning. So that's really cool. Cash App's been doing some really cool work building out a custom kind of node at scale implementation. So that's fun. Moon, I'm not sure what they use. They have a pretty cool way of doing accounting where your wallet is actually a 2 of 2 on-chain thing, and they pay Lightning invoices on your behalf, but all of your funds for your stuff is in a 2 of 2 sig with Moon. So that's kind of cool. Breeze, I think, was originally on L&D, but I know they're moving over to, well, they're moving over to something. I don't know if I'm allowed to talk about that. That's okay. This is like Handwave. They should be having an update soon, which is very exciting. Electrum, my understanding is Electrum did their own Lightning implementation in Python, which is cool. Nice. Phoenix and Wallet of Satoshi are both built on Eclair stuff. And then Strike, I'm not sure. I think they run the Lightning Network daemon from labs in the background. So they're, I don't know, but it's really cool because there's a really big diversity of implementations across the entire ecosystem. I just want to, we really care about decentralization in Bitcoin land. And like I was saying earlier about how Lightning is the most decentralized layer 2, that's both in like number of people running nodes, right? There's just like thousands of people that have Lightning nodes that are on the network. But it also means we have this huge diversity of implementations that all work together and interoperate. And that's not even something that like, Bitcoin layer 1 really has struggled with that, but Lightning, we managed to make it a reality. So that's really cool, I think, to see. Sorry to like give you all the background info, maybe TMI, but it's kind of fun to work.
Yeah, I mean, I think it really drives home the point that like the Lightning Network is not one thing or one organization. It's a protocol that anybody can go implement and plug into. And we're seeing that by all of these different applications and wallet providers and service providers popping up that are all kind of plugging into this network and providing different kinds of services in different ways. Cool. So how do you participate on the other side of transactions as a merchant? First would be go accept Bitcoin and Lightning Network payments and tell people that you accept Bitcoin and Lightning Network payments. There's lots of services that are popping up now to help do point of sale integrations and online web store integrations and all kinds of different ways of accepting Bitcoin and Lightning Network payments. There's a few of them here. So, anybody that runs a Shopify online web store, for example, can go add a Strike integration, and then pretty much automatically they can accept Lightning payments, and they can even accept payments that the user will send as dollars, but the merchant receives as Lightning Network Bitcoin, which is pretty cool, and vice versa. All right, I think that is it. So thank you everybody for attending our little webinar here on the Bitcoin Lightning Network. We're happy to stick around for a few more minutes and answer any questions. If you have any other things that you'd like to discuss, please drop them in the chat, and we're happy to stick around and help answer them.
Yeah, thanks Tyler for pulling me in to help talk about Lightning. This has been really great.
Yeah.
Do we want to go back to Ivan's question about liquidity, inbound liquidity?
Sure, yeah. So I've been asked kind of earlier in the presentation, what can Blockstream and BitGo offer for solving the inbound liquidity problem? So I can't break any news, unfortunately, on the BitGo side about kind of services that help you manage inbound liquidity. There are other what we call kind of Lightning service providers that will help negotiate inbound liquidity for you. Typically, you pay them a small fee and they will open a channel to you. There's also several kind of different marketplaces where you can go exchange liquidity with other participants on the Lightning Network. There's lots of people that have funds that they will use to open a channel to you if the price is right and it's worth the allocation of their funds. Again, Bitcoin is a scarce asset. Bitcoin on the Lightning Network is even a scarcer asset. So very rarely are people willing to lock up their Bitcoin in a contract with you for no benefit. So.
Yeah, I think that's a pretty good overview. And it's exciting to see, I think, these marketplaces pop up where you can buy it, because it really, you can find out kind of what people value, their ability to value that Bitcoin for, right? Like, what is the return of holding Bitcoin and being able to lock it into a Lightning channel? So I think that's going to continue to be a really kind of exciting new way of figuring out what Bitcoin, what is it worth to hold Bitcoin, if that makes sense. But what if you're holding it in a Lightning channel? So I'm excited to see that those markets develop and we get more people on Lightning and more volume, and see how the price of inbound liquidity kind of changes, right? So.
So Jen asks, what would you say to a merchant apprehensive of adding a Lightning integration or a consumer apprehensive of using it? Well, my take on that is start small. You don't have to go whole hog and not take US dollars anymore. You can start with small transactions and just get a feel for how it works. I mean, if nothing else, you're going to save the 3% processing fee over using a credit card for that same transaction. There is no middleman on the Lightning Network that's kind of helping to process your transaction and taking a fee for that privilege. There's just kind of a small routing fee that you pay, but it's much less than the 3% that you would pay to a credit card provider. So set it up, start with something small and see if there's any adoption and see how you can grow it. You have anything else that you would say to a merchant or consumer, Lisa?
I think that one thing that tends to make people feel better about new technology, not just Lightning, like anything new, is having a connection or a person that they feel like they can ask questions to. So if you know how Lightning works and you want to help talk to merchants that you know or consumers and help them figure out how to get online, that's usually, I think that's never a bad thing. Or if you're a merchant and you're interested in getting online, I know that I know Nate from Voltage used to run like free, like he'd do one-on-one consultations on setting up BTC Pay servers and that sort of thing. So I kind of want to be like, free feel to reach out and I'll try and put you in touch with someone that like knows how to do that. So I mean, at least like that offer stands until my inbox is too full. But if you want to reach out and talk to people, but I really think that adoption of all things kind of comes through personal, hands-on, one-on-one sort of like not hand-holding, but like definitely like having someone you feel like you trust that you can ask questions for that can help unblock you. So I don't know. Yeah. That would be my like. I'm like, there's people behind everything.
Yeah, I think that's critical to have somebody you can ask for help. I would also say that the barrier of entry is always getting lower, and it's getting lower quickly. These new services are coming online that make it very easy to almost do like a one-click Lightning integration if you're using a lot of common providers for payments already. So it's not as hard as it might seem on the front cover.
And honestly, like I guess for a merchant it's a little different, but you can definitely just download like a wallet on your app on your phone and start sending and receiving things. And if you're a merchant, you can go to like if you sell things at craft fairs or whatever, you could just have it on your phone and accept Lightning on your phone. Might make your accounting a little difficult, whole different question, etc. Yeah. I'm gonna hand wave over that. But in terms of just getting started and getting comfortable with things, I really do think that like the mobile apps are probably a great way to start.
Yep. David asks, can you help me understand why I'd spend Bitcoin? Seems like it's better to save it given its rapid appreciation and spend other currencies, digital or otherwise. Yeah, that's a common question. Why would you spend your Bitcoin? So I think Bitcoin, for it to be a true kind of money, it needs to be able to be used as payments. There's certainly places where you might get paid in Bitcoin and you have to buy stuff and you need to spend your Bitcoin in order to get things so that you can live. In a world where you're getting Bitcoin as income, that is kind of a mandatory thing, right? Right now we're in this transitionary period where you're disincentivized to spend Bitcoin because you want to speculate on the future price appreciation. I think that there's going to be a point where the Bitcoin price kind of stabilizes at some level, and then in order to have an economy based on Bitcoin, you're going to have to transact it and buy, goods and services. And so that future is what the Lightning Network is trying to enable.
If I could add like a little bit, maybe my thoughts around this. I think that you're talking earlier about how Lightning is so cool in terms of instant digital settlement of payments, right? So I think at some level, the reason that Lightning is going to be a pretty ubiquitous payment thing is because it, as a technology, like forget price, forget like spending it as an asset, etc. At some level, Lightning and the ability to make Lightning payments is like a totally new, novel, fun, interesting technical way of sending payments and having them get there like in a really like fast and secure, trustless manner. It also, like Tyler was saying earlier, really makes it possible to do like micropayments in a way that micropayments really haven't been possible before. Like, I don't know if you've ever used like process credit card transactions, but they have like a 30-cent minimum fee on every transaction. And so if you're not earning like more than like $1 or $2 on a credit card transaction, it doesn't make any sense to like send it over the credit card network. So I think that whether you're like holding your assets in, like, I think there's definitely a way with Lightning where, you buy the Bitcoin immediately before you send it over to the Lightning network, so to speak. Or, you don't, so I think there's ways around making it feel like you're spending your Bitcoin. If it's something you were going to buy anyway, and it just so happens that you have to have a like Bitcoin native asset in order to transact with it or whatever, I think that there's definitely probably going to be solutions that kind of cover this like last minute conversion of asset into Bitcoin, et cetera. But yeah, I think the answer is like, why would you spend your Bitcoin? You spend it because it's the best technology for making that payment. And there's no other like technology that lets you make those payments in the same way. So.
Yeah, thanks, Lisa. That's great. Greg asks, could a routing algorithm prioritize your node to minimize fees? I'm thinking zero-based fee logic from René Pickart. Maybe that's a good one for you, Lisa.
Okay, yeah. Yeah. The answer is that so routing algorithms and Lightning are really interesting. I think it's something that I personally expect to see a lot more innovation and research into over the next 5 years, or decade even. The current answer is every Lightning implementation today has their own routing algorithm, and everyone prioritizes slightly different things. In Core Lightning, which is a project I work on, I know one of my teammates, our team lead, Rusty Russell, has been working on implementing a second routing algorithm. So you would have options of which routing algorithm you could use. Specifically, he was implementing something, he's calling it René Pay, which uses a René Pickart's research on the min cost flow problem in order to find the best route. So I can imagine, I think routing algorithms are going to all be different. They're all going to prioritize different things. They're all going to use different kinds of information. You can, how fancy you get kind of depends on what information you're using to figure out the best route, etc. And yeah, using your node to minimize fees is definitely one way to do it. I know there's other things you can kind of what do you call it? There's other ways you can, other things you can prioritize. Minimum fees is one of them. Shortest distance, number of hops is another one. I think Core Lightning, we try and randomize your route a little bit, so we don't always pick the cheapest one to kind of maximize privacy. So that's a privacy thing. So we're not minimizing fees because we're prioritizing some amount of privacy there. Because someone could try and figure out where your payments are going by having a path that has 0 fees, right? And then they would just see all the payment traffic. So we try and minimize your people's ability to track your payments. But yeah, every routing algorithm is different, and Core Lightning is kind of cool, not to totally shell my bags, but to totally shell my bags. All of our pay stuff is written as something that we call plugin. So if you wanted to try out writing your own routing algorithm on Core Lightning, you could write a plugin that uses the same kind of data that are the built-in one that the app ships with. And then you could have a whole nother pay command that you use that uses a custom routing algorithm that you wrote. So yeah, it's kind of an open problem.
Jeff asks, channel funding question. If I open a new channel with a stranger with 1,000 sats on my side, and then the nodes route sats around for a year and all the sats end up on the other side and I close that channel, are they still my sats regardless of the side they are on at close? That's a good question. The answer is no, they are not your sats anymore. Once they're on the other side of the channel, they're belonging to the other partner's balance. And so that transaction that closes the channel will pay those sats out to their address. So the answer is no, those sats are no longer yours. Now, presumably, if those were not your payments, but you were routing a payment on behalf of somebody else, someone else pushed an equivalent or larger amount of sats over to your side on another channel. So it's not like you're out of that money. It's just that you received it in one contract and then you pushed it out on another channel or contract. All right. I think that's all the questions I see in the chat, and we are just about at time here. So I want to say thank you, Lisa, for joining us on our Lightning Network webinar, and thanks to all the attendees for attending, and thank you very much. I think that's it.